Thank you very much, Mr. Vijay, for being with us today. It's a pleasure having you. For oil prices today, they are at $80 today. We have seen between 78 and 82 during the last 6 or 7 days ago, maybe waiting some breaking by the investor. If we are going to see a breaking, is it going to be over or below the $80?
Well, it does look like we might get a breakout on the upside. We are largely seeing crude oil prices staying between $70 and $90. And it does look like the OPEC Plus will definitely keep increasing their cuts on oil prices as long as the prices remain above $80. The target prices are $80, and that's why it does look like a breakout on the upside could take Brent prices towards 85 in the coming months.
Today, the Chinese data showed that Russian exportations reached record highs, but we don't see that economic recovery in China as it was expected in the beginning of the year, and it seems that inventories are increasing. The question, do you think that we can see the continuation of the Chinese demand or for the Russian or non-Russian oil, or during the second half we are going to see something else, or the contrary of what we have seen in the first half of the year?
Well, definitely we have seen a slowdown in the Chinese recovery. There is no doubt we have seen in their export numbers drop. We have actually seen the GDP numbers come much lower than expected. In spite of that, we have actually seen quite a lot of imports coming in from China, and that is a very positive sign. Along with that, definitely the road to recovery will be a little slower, but it does look like there's a solid footing now. Not just China, but across the world, there is much lesser fears of a recession. The inflation seems to be much more controlled. The central bank seemed much more relaxed, and does look like the policies are working very much in favor. So all these things combined, it does look like oil prices might be pretty much in the range. However, China does happen to be one of the major concerns, but it does look like China is on the road to recovery, and the second half for China will be no different than other parts of the world, and it does look like there will be a steady recovery coming, and the GDP numbers will definitely start growing from the end of the year.
Let's go to the precious metals. And after the rally that we have seen on gold, silver, and the other metals, we are seeing some slowdown or maybe profit taking after this big rally, trying to reach the $2,000, but the bond yields are really limiting those gains. What do you expect in metals, specifically gold? What are the factors that will determine its trend in the second half of the year?
We have seen gold pretty much being a story of triple tops. There has been a triple top on gold, which we have seen at 2060 odd levels. That is a major triple top. In the last 2 months, 1987 has been the number. It has pretty much been the exact number of 1987, and gold has just taken a profit taking from there. It does look like gold prices are going to remain pretty much on the bullish side for the rest of the year, but it does. It is a short-term profit taking, but the minute 1987 is broken, I think the 2000 barrier is not very far. We do expect that gold prices should go higher as the dollar might continue to fall in the rest of the year.
If you would like to bet on the commodities during the next 6 months, what are those commodities?
Well, majorly the commodities that we are massively bullish on are silver and all other industrial metals. It does look like industrial metals will start to take a big recovery. So silver is definitely the first pick, and copper being the second best. Industrial metals will definitely see a rebound because we will see a complete turnaround in the economy as interest rates might pause and might even have a graph of when they will actually start tapering the interest rates. That will actually lead industries to actually consume much more, and that's why it will actually be a supply issue that might be a problem going forward in the year.
So does it mean that you are not having any potential for recession for the end of this year or the beginning of 2024? You are betting you are betting more about the soft landing?
It does look like a soft landing. I think we're pretty much in what we were in the 1970s inflation levels, although that was a very, very high level of stagflation of almost 6 to 7 years. But we are pretty much in the 1970s phase, which might probably last for 2 or 3 years, and we might see not making new highs on the market, but a stagnation on the equity side, but a rally on the commodities side. So it might be a sectoral rotation, and that is what is expected in this year and as well as start of next year.
Thank you very much, Mr. Valecha, for being with us today. It was a pleasure having you.
Thank you so much.